Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 19th of June, and we're back in that zone between the 200-day moving average and the old April support there around 76.30. Want to see an end-of-day close above 76.30 to give us the chance of trying to break that April resistance line around 76.90 and ideally the 50-day line 77.20. Below the 200-day line, there's a risk, I suppose, of a probe towards 73 to 7400, partially testing the March support area, but at least while we're above the floor of that rising trend channel from August last year at 7500, we may count ourselves as being still in a base building mode ahead of a potential move to the upside. On the negative side, though, we've had a failure in RSI 50, back at 47 now, so that can be a leading indicator on the downside, hence that's why we might be prepared for a move towards 7500 or even below that. On to the DAX, which has been leading the way amongst major indices, at least the ones we cover here. Didn't quite wasn't quite able to break through 16,300 in a comprehensive way, although we had a good day on Friday. The current situation is that we've got this rising trend channel from back in September. The floor of the channel currently around 16,100, so above that we're looking to the upside and potentially a move up to 17,200 as soon as the end of next month, but a lot of work to do, I suppose. 50-day line there at 15,900, 15,700, the turn of the month support for this market, which is basically the line in the sand dividing us between bullish and bearish. On to the Dow, and here you can see that we've got a situation where we finally broke a line of resistance from April last year, but looking a bit sheepish at the higher levels. Obviously a lot of resistance post-December between 34,000 to 34,700, and so one could argue that we really need to break the upper limit there, but at least in the meantime, above 34,000 and that broken April resistance line, we can say that a breakout could be on its way. If we do break down, at the moment, not looking for anything lower than 33,500 in the 50-day line, but obviously there is always the risk of further moves to the downside, 32,800 at the 200-day line. But at the moment, assuming that 34,000 plus will hold. On to Bitcoin, which has managed to dig itself out of the worst scenario, which was having to go and test the 200-day moving average around 23,900. We bounced off the old August to February resistance, 25,000. Still trying to break through the 50-day line and that April resistance line around 27,100. Through 27,100, we could have a peak at the 30,000 plus area, but probably that's for July, not for June. On to the stocks, and starting off with Avacta, which has been in the spotlight over the weekend. Here we were looking for a potential break of that resistance line there from back in February. That's around 105, so an end of the day close above 105 is really what the bulls are looking for to shake off those fundraising fears. If we can break through 105, then the next target up would be 115 at the 50-day line. Otherwise, end of day close below 105 risks a obvious retest of the 99 pence floor that we had back on Friday. But at the moment, it's all about 105 on an end of day close basis. Stock which seems to have a bit of momentum at the moment is AIQ, and here we've broken a resistance line there from back in August around 8 3/4 above that, looking for the shares to not only head up to February resistance, it's just shy of 13 pence, but up to 22 pence maybe over the next 1 to 2 months. If you're cautious, you wait for an end of day close above the 50-day line at 10.5 pence before assuming a push to the upside. Big news today from Abingdon. And the shares seem to have been expecting that over the recent past, hence the build from around the 4.5 pence level back in March. Current situation is that we're well clear of our previous target, around 13 pence. Above that, we have been looking for up to 20 pence, and that hopefully will be achieved by the end of next month. High today, 18 pence, so maybe if we're really lucky, it'll be the end of this month, but some profit taking, as you can see, has already come in. But 20 pence hopefully nailed on for Abingdon over the next few weeks once today's news settles. On to Beacon Energy, and here we've got a situation where the shares have been able to consolidate at the lower levels. What we're looking for here is an end of day close back above the April support there around 10.5, 0.105 that is, but 10.5 let's say, and above 10.5 looking for a retest of up to 0.16 pence by the end of next month. The trigger here would be an end of day close above 0.11, so if you're cautious you wait for that to break before assuming a retest of April's resistance. Stock which has been doing rather well on the quiet has been Creo Medical. Here we're just breaking the 200-day moving average, which is quite an achievement. After the break of the 50-day line at 25 pence, we were looking at 40 pence. We can now probably upgrade that to 41 pence at the top of that rising trend channel from December. In fact, one could even say that the shares are going to hit 44 pence by the end of next month, which is a slightly higher resistance line projection that I've drawn there from back in December. Upside value while we hold above March resistance at 32. So above 32, looking for an upgraded 44 pence on Creo. On to Caracal, and here things seem to be relatively stable either side of the 50-day line for the most of the recent past. 0.37 is the level of the 50-day line, above 0.37. Still looking for the upper 50s or maybe up to 0.6 there for the shares within that rising trend channel from the end of January. On to Eden, and here also quite a decent performance, maybe surprising people by the strength here. Initial target here was up to 7 pence. After that, we were looking now for a target as high as 10 pence at an October 2021 resistance line. And hopefully we'll see that over the next couple of weeks or maybe even sooner. Upside value while we hold above 7 is the current message on Eden. EKF, the next on the list, and here you can see that we're just touching the 200-day line. We've broken a neckline resistance there around 30, we'll call it 32 pence. Above that, looking for a best case scenario target as high as 57 pence over the next couple of months, but we want to see an end of day close above the top of that gap there at 38 pence before we are more confident that the mid 50s or upper 50s could be on their way. But a great W-shaped reversal there and a bear trap below 25 pence and unfilled gap to the upside. In fact, two unfilled gaps to the upside suggests that this share or this stock is on its way. Stock which has been followed keenly by some is Kropz, and here we're also breaking the 200-day line for the third time since April. Hopefully it'll be third time lucky, given the way that the 50-day moving average at 3.2 pence is rising. Initial target here, the top of that December triangle at 5.25. After that, maybe by the end of next month, up to 7.5 pence, retesting April resistance. So a nice turnaround there on Kropz. Litigation Capital, not a company which gets a lot of airplay anywhere, but here we have it, and got a rising trend channel off the lows. August resistance line projection at 90 pence, so hopefully we can hit that by the over the next couple of weeks, and maybe even fill the gap up to 91 pence from basically this time last year. Upside value while we hold above that gap down at 77. It's above 77, looking for 90 initially on Litigation. Good to see Predator do well at the moment. Here we were looking for 11 pence. The high today so far 10.25, but 11 pence hopefully by the end of this month. And we're able to upgrade the upside now. A July 2022 resistance line projection is heading for 15 pence, and maybe we'll see that by the end of next month, while we hold above the initial June resistance around 8.75 pence. Unfilled gap to the upside. Both the 50 and 200-day moving averages are both rising, hence we are in the sweet spot technically for an ongoing move to the upside, and it'll be nice to see the shares can hold above that April peak at 9.85 on an end-of-day close basis today. Stock that a lot of people look at is Premier African, and here found good support. 0.7 pence, that was sort of resistance on the way up, so it makes sense that we found support there. Initial target here, the 50-day line at 0.86, and then after that, hopefully, the shares have done enough to hit the top of that rising trend channel from last year at around 1.1 pence. by the end of August, let's say, giving the shares a bit of time. But ideally, the main thing there is that we hold above 0.7 pence. Reneuron is the next play, and here, nice break above the 50-day moving average over the last few sessions. Above that at 7 3/4, looking for up to 15 pence at the 50-day moving average, and at the top of that rising or broadening triangle that's been in place since December. Extended uptrend line in the RSI window as well. Bullish divergence line also backs the idea of hitting 15 pence over the short term. Finishing off with Zanaga, and here we've got a steeply rising trend channel from November last year, gapped up above the rising 50-day line, which is a good continuation signal, and above 8 3/4, looking for as high as 13 pence by the end of next month. There is a line of resistance to break from back in April around 8.7 pence, so hopefully we close here or above. We are heading up to 13 pence over the near term. That's it for me today. More updates tomorrow.